You have probably heard it a million times. Never pay up in trading. Always wait for pullback or retracement to get a better entry. But what if I told you that's the exact opposite of what I do? And it's led me to 16 straight winning months. Yeah, I know, it sounds crazy, right? But it works. And today's video, I'm going to break down exactly why. If you're tired of playing by the same old rules, you're not making money, not seeing results, stick around. This might just change the way you think about trading forever. Now, I get it. This is probably will go against everything you've been taught. Trading can feel overwhelming, especially when you're starting out, with all the different strategies and rules floating around. But trust me, it doesn't have to be that complicated. I'm going to walk you through why this approach works for me step by step, so you can see how to apply it to your own trades. Now, don't get me wrong, buying on a retrace or waiting for a better price works for many people, but it's just not the way I trade, and it's not been the way and the key to my own success. Everyone has their own trading style, so if you're ready to shake things up or you're curious about a new perspective, stick around. This could be the little twist that you've been looking for. Hello everyone, I'm KATHY LIEN with BK Traders, and my goal is simple: to share tips from my own trading experience and career to help you shortcut your path to success. If you're serious about improving your trading, you want more tips to level up your trading skills, make sure you subscribe so you never miss another video. For me, the secret to success is trading momentum, buying into strength and selling into weakness. When I see the market moving with power, I want to jump in and ride that wave. This keeps my trade time short and gives me the best chance of hitting target quickly on my trades. By getting in when the market is already showing strength, I minimize the time I'm exposed to risk, and the momentum helps push my trade to its goal faster. There are three core components to my trading strategy: fundamentals, technicals, and sentiment. When it comes to fundamentals, I want the news, I want the data, I want the overall fundamental outlook of the country to back my trade idea. For technicals, I make sure I'm not buying into resistance or selling into support across multiple time frames. It's really that simple. And when it comes to sentiment, it's all about buying into a strong rising market and selling into a weak one. Sometimes that even means buying at the highs and selling at the lows, which can be hard for many traders to wrap their heads around. But that's the key to my consistency, and after trading this way for 10 years, I know it works. Let me give you a real example of how this works in practice. Recently, I shared this chart with BK Traders and pointed out a great opportunity to buy Aussie yen right at the Asia Open, which is where my arrow is pointing. Almost immediately after, the pair starts climbing, following a long period of consolidation. Now, was that just luck or coincidence? Absolutely not. It was a perfectly timed trade. If you've been following me, you know that I enter trades twice a day. Once at the Asia Open at 8 p.m. New York time, and again at the early New York Open at 6:30 a.m. New York time. Now, these aren't just random times that fit into my busy schedule and life. They're specific windows I've fine-tuned through the years of live trading. These are the best times for my strategy because that's when fresh traders are entering the markets, reacting to what happened overnight. So no, it's not luck. It's all about timing. Think about it. Before 8 p.m. New York time, we often see a quiet consolidation period that is typical of the Asia session, which you also see in this chart. Then right at 8 p.m., boom, we get momentum and oftentimes a breakout. Now, I want you to go look at the chart again. You'll see I'm buying Aussie yen near its highs. And if you look at this daily chart, you'll notice that it is also at the top of its recent range. Now, most traders would prefer to wait for a breakout and then a pullback, but my strategy doesn't require that because my first target was hit just over an hour after I entered the trade. Quick trades and fast exits starting right around 8 p.m. New York time are a common feature of my zip trading strategy. Now, here's another example from a recent New York session trade. Because I trade Asia, I trade New York. This is a chart of the New Zealand dollar against the US dollar, Kiwi dollar, with the arrow pointing at 6:30 a.m. New York time, which is exactly when I placed my New York session trades. As you can see, I'm selling near the low, which I know isn't easy for everyone. And I certainly got questions about it, but I had a zip sell signal shown by the white candle. Now, you might be wondering about the other colors on the chart. I designed the zip indicator to be simple, easy to read, and quick to interpret, which helps prevent impulsive trading. When the background is red, it indicates a bearish long-term trend. If the currency pair is trading below the indicator line, the short-term trend is also bearish. However, if it's trading above the line and the background is red, that means the short-term trend is bullish and the long-term trend is bearish, signaling that the two trends are not in sync. And maybe you want to take a second thought about taking the trade. Now back to the chart. You'll notice that there are 3 more white candles the day before, signaling weakening momentum in Kiwi dollar. Whether the trade results in a big move or a small move, the key is having momentum or sentiment on your side. And that makes all of the difference in keeping your trade time short and making sure you're consistent. It's worked for me. It's helped me maintain consistency. And that's the way I've been trading for more than a decade. The risk with waiting for a pullback is that you could end up buying the top or selling the bottom. If you want to learn more about my zip strategy, check out the links in the description below.